Guys, good day to you, everybody. I want to uh, explain to you today that interest rate differential is not the only factor we consider before determining the direction of any instrument using fundamental analysis. I know many people just go straight to finding out the interest rates of the two currencies in a pair, and they just buy the one that has a higher interest rate, you know, meaning automatically they are selling the one with lower interest rates. But I have to give you an exception to this rule so that you don't just, start to sell dogmatically or having to buy, just without reason. All right. Of course, if there are two currencies with a very wide differential in interest rates, for instance, if one is 0% and the other one is 2%, of course, there's a very wide differential, or another one is 1%. 1%, guys. Another one is 1%. There's very wide difference in rates. But what of if there's another one of minus 0.7%? Can you see the margin between 0 and minus 0.7% is just minus 0.3%. So this interest rate difference is not much. All right. So, of course, you know that 0% interest rate is higher than minus 0.7% interest rate. Okay. So, if you have to look at it that way, then it will suggest to you that you will need to buy the one of 0% interest rate at the expense of the one with minus 0.7 interest rate. But the essence of this video, guys, is to let you know that the currency with minus 0.7% interest rate might be a darling to investor at the expense of the one with 0% interest rate. All right. I'm going to be taking you to trading economics. We dive into the realm of fundamental, guys, to look at other data, that you can check that will make a currency with lower interest rates to be a darling to the investors at the expense of the one with slightly increase in interest rate. All right. So let's consider this particular pair, Euro CHF, as a case study, guys. Let's consider this as a case study to illustrate this point. Now let's go straight to trading economics, right? Trading economics, in case you don't know the website, what you just do is to type here, just type in trading economics.com, tradingeconomics.com. Okay, when you get there, you will see some current news that are happening. ECB raise rate by 25 basic points in July. All right, in July, see all news here, but that's not our concern. Go to indicator, go to country, click countries. We are looking at Euro CHF. This Euro area. Click Euro area, guys. Check their data. Look at the GDP growth rate 0.6. Last was 0.2. is increased, is better. GDP annual growth rate is increased, is better. Unemployment rate is the same. Inflation rate is higher. You know, inflation rate month on month is higher. Interest rate is 0. But I want you to look at this figure, guys. Look at this figure, guys. Balance of trade. Balance of trade. Look at this, guys. Balance of trade. Look at this one, guys. Current accounts. Okay, of course. You know, current account is made up of about 4 components. You have goods and services. You have what is called capital accounts, and so on and so forth. Okay, all the assets you have in other countries, you know, you have to calculate all those things. Those are capital, like buildings, like this and that, the companies, industries that the countries have in other economy. They have to value all these things. But let's look at the balance of trade. Look at it, minus 8,778. It now went down to minus 16,382, meaning that in the Eurozone economy, they are importing more than they are exporting. They are exporting little, okay, but they are importing too much. That is why their balance of trade is negative. Okay, I want you to take note of these two data, guys. Look at consumer confidence. Well, just look at these two datas. Okay, datas. Let's go to CHF, guys. Let's go to CHF. Let's go to CHF. Switzerland here. Let's look at it. Of course, you see the GDP growth rate is fine, fantastic. It's from 0.2 to 0.5. GDP annual growth rate from 3.6 to 4.4. Are you beginning to see that this economy is better? Look at unemployment rate from 2.3 to 2.1. There's job creation. More people are being employed on the marginal notes anyway. Inflation rate from 2.5 to 2.9. Can you see that in Switzerland, okay, inflation rate is not high. It's not as high as what? As Eurozone. If you go to Eurozone, what is inflation rate? Let's go back there. Let's go back there. Okay. Sorry, just hold on, guys. You just have to stick with me and get this thing clearly. Eurozone. Look at it. This is Euro area indicators. Where's inflation rate? Can you see? From 7.4% to 8.1%. Can you see? Whereas for that of Switzerland, guys, look at it. Look at it, guys. Inflation rate from 2.5 to 2.9. Can you see? The inflation rate in Switzerland is kept just a little above the targeted rate. So they are doing fine. All right, look at the interest rate from this interest rate. Let's clean up these, guys. Let's clean up this. Okay. Now look at the interest rate, minus 0.7. But I want you to take note of the current account and the balance. Can you see this one? These two data, guys. Balance of trade. Can you see? From 1,836, guys, to what? 3,843. Can you see? Balance of trade. In Switzerland, it's almost times 2 from in this period. This April 2022, guys, it increased from the previous value of 1,836 to what? 3,843. Can you see? So they are doing well. They are doing better. Okay, they are doing better. So these are the things I want you to look at, guys. So if you are having this kind of figure, this balance of trade, you're having this kind of figure, and if you just oppose it with what you have with euro, this is positive. This is from 1,836 to 3,843. Go and look at that of euro, guys. Look at that of euro. A balance of trade from minus 8,778 million euro to minus 16. Their own went down. It went down. This is almost a crash in the economy. They are importing a lot, exporting little to the other part of the world. So you can see that by virtue of interest rate differential, euro is having interest rate of 0%. Now it's just been increased to 0.25% today, and that of CHF is what? For Switzerland, as announced by National Bank of Switzerland, it was minus 0.7. Okay, can you see it now? So if we have to buy a currency, one is 0% interest rate or 0.25. Another one is minus 0.7. This one, if you save money in the bank, guys, you are going to pay bank. You are going to pay bank for keeping your money for you. But this one, guys, if you save money in the bank, you are not going to collect any interest on the money you have saved. But this one, your money will be dropping, your balance will be dropping. Which one will you prefer, guys? Ordinarily, we should prefer euro to CHF. But based on this fundamental balance of trade, guys, that I've showed you here, can you see? This is euro, very bad, extremely bad in the red, extremely bad, guys. And then when you compare it to Switzerland here, this euro area, Switzerland here. Can you see? Very positive, almost double here. Okay, so based on this, I will be of the opinion that CHF should what? Should strengthen against euro, and euro should go down. So I want to sell my euro in order to buy CHF based on this analysis that is before me, because I'm not going to use only interest rate to judge what is happening. I'm looking at the trade balance. Okay, I'll be happy to keep the currency of a country that is having a positive trade balance, that's having a healthy, current account. Because, guys, these are the two most critical economic data that we use, to judge the health of the economy of any country. You cannot say your economy is doing well and is healthy when you have an extremely negative trade balance. You have a very bad current account. You are not doing well. Do you understand? So fundamentally, we have concluded that CHF should strengthen, and then euro should what? Euro should go down. So based on this, guys, we want a sell opportunity for euro CHF. Can you see? So we are done with part one of this analysis. We are done with part one of this analysis. So part two will be to go on the technical chart and do a top-down analysis of euro CHF so that we know where we are going. So if you do this, if you want to do this top-down analysis, guys, you start with a monthly time frame. And in doing this monthly time frame, guys, we see that after this impulsive move to the downside, you see impulse, you see impulse. Okay, you see impulse, you see impulse. But here you see correction, 3 waves up. Okay, then you need a 3 wave. You are having a 3 wave down. Okay, but I want you to take note of something. This wave here, guys, this waves here is not equal to this wave here. So you need this to still come down so that there will be equality between this wave and this wave. Okay, how do we measure the two waves and ensure that they are equal? Go to trend-based field extension, guy. Drop it here, drop it here, drop it back to the end of the correction. Target the level that is 100% field extension. Where is it? This place. Boom. Guys, this is where I want you, CHF, to come back to in the near future. All right? And if you should come back to this place, that means that we are going to be having this structure. We're going to be having impulse, 1, 2, 3, 1, 2, 3, then 1, 2, 3. Can you see? So by the time this is completed, that will be a corrective structure for this last cell impulse. So we'll have another impulse this way. All right. Then what happened to the impulse that goes up? It also comes this way. Then you have formed a complete corrective structure. So in that case, if we have to label it, this becomes W, X, and Y. Okay, where this impulse that goes down is with A, then the W, X, and Y becomes with B, and then this move down becomes with C. All right, this move up, this one becomes A, B, C, and itself, it becomes a corrective structure for this impulse that goes to the upside, which we label A in brackets, then A, B, and C. Let me put an arrow. Let me explain. This is A, B, and C now. Okay, that one has become a correction, and that is the will be of larger degree. Okay, will be of a larger degree in bracket, and this is wave C of a larger degree in bracket. Thereafter, you are going to have, okay, I'm going to have this movement to the downside here, guys. This movement to the downside, I'm going to repeat the same thing here. Okay, because at that point in time, this impulse, guys, this impulse here has been corrected substantially to what? To 50 to 61.8% field retracement this side, guys. And then you can have your move to the downside. So this is the analysis of this pair on the monthly. Okay, monthly will give you the idea of where you are going. Now we have to concentrate on this portion to the downside. We want you to hit this level, guys. Okay, we have to concentrate on that portion. And right now, guys, you have seen that you have an impulse here. You have 1, 2, 3. The 3-wave corrective structure is over. Then we need this move to the downside. Okay, in compliance with the cell that we have, with the cell direction that we have forecasted based on our fundamental analysis. Based on our fundamental analysis, we have forecasted cell of Euro GBP. Now, Euro CHF rather. So if you go to 4 hours time frame, guys, you will see that we are getting closer and closer to the analysis. Then you have this move to the downside. You have 1, you have A, B, and C. Okay, A, B, and C, because C cannot be 3 waves in a flat, and it cannot be 3 waves in a zigzag. Then we gladly call this move WXY. Okay, we call it WXY. This is 1, 2, and 3. This is 1, 2, and 3. This is 1, 2, and 3. This is a WXY structure, guys. Okay, this is WXY. It's a WXY structure, guys. And after, what is it correcting? It's correcting this move to the downside. And after this WXY structure is formed, guys, we need a move crazy move to the downside. And where are we having the move? We have this AB based pattern here. This is the impulse. Okay. And on getting this impulse, we are looking forward to having a correction that will correct this move 50 to 61.8. All right. All right. 50 to 61.8. But right here, liquid guys, that's formed extended structure 1, 2, and 3. W 1, 2, and 3 X, and then you have this. We wanted to have WXY guys, but this structure has given us ABC structure. All right, ABC structure. Why is it ABC structure, guys? 1, 2, and 3 A. All right, 1, 2, and 3 B. Okay, 1, 2, 3, 4, 5. This is an impulse C. When you have 335, that is a flat corrective structure. This is an expanding flat. It's an expanding flat corrective structure. Yes, it's an expanding flat corrective structure. And after this expanding flat corrective structure is formed, you want a push to the downside that reflects or that is in alignment with our fundamental analysis. And then when this grab liquidity and supply here, it already gives you a push, right? It already gives you a push to the downside. So let's go to 4 hours. We're gradually going to our entry time frame, guys. Let's go to 4 hours. You see the impulse, you see the move to the downside. You need to calculate, you need to find out the supply area here. Number one, let's do the fib. It's an impulse. That's rule 1. You must find an impulse. It's an impulse. So this impulse is going to end here, guys, not here. Why are we ending the impulse here and not here? Because if we come here, we are fibbing, we want to fib correction as part of the impulse. And it's not going to give us accurate, reading. So let's try it, guys. If you are using this level here, then you'll be having your 50% retracement here. Okay? But if you are doing it here, look at where your 50% retracement is, this side. So this thing is not going to give you accurate reading except you know where your impulse stop. But in your impulsive leg, you are going to calculate this width with it. Start from this width, extend it to this level. Okay, this is just a part of the correction. This candle is a part of the correction. This is with A. This is with B. So we want this wave C to come up to this level. All right. Then before we look for sell opportunity to the downside. Is that okay now? So now what we do is simple. This structure that is forming is a known structure, guys. You have an impulse, 1, 2, and 3. Then you have this, must come up here. So this is going to be a zigzag corrective structure. Let's go to 15 minutes. It's going to be a zigzag corrective structure, guys. Okay, a zigzag corrective structure. So now, I would know that this is a zigzag corrective structure. What you need to do right now, real quick, guys, is to find the trend-based fib extension of this with A here. Take it back to this level, guys. All right. So you must have to measure the area that corresponds to 100% fib extension. Okay, where is it, guys? This is it. Boom. Okay, this is where I want wave C to stop. This is where I want the wave C to stop. And then aside that, I have to calculate where's my supply level here. Where's my supply zone? You have this big candle, guys. You have this big candle. You have this big candle. But as far as we are concerned, it is this second big candle that corresponds to our 61.8. So our supply level should be based on that candle. So if you look at it, this candle that formed before this big one ended here. All right, and this candle that formed after it ended here. Look at the wicks here. So this zone here, right here, real quick, guys, is our supply zone. And coincidentally, you know that this supply zone now matches this target. When we did 100% fib extension, this is what we got. Okay, so we are expecting this pair to move from the current spot at 1.0405 to hit 1.0457, about 50 to 55 pips moves, guys, to the upside. Okay, so this is where we want this stuff, this pair to take a volume, and from here selling this pair right from here to the downside. Okay, where's our target? Remember, we spotted our target the other time. Our target is way down here. Okay, that's the monthly level. That's our target, where we projected it on monthly. That's our target, guys. It's going to be way down here. That's our target. Okay, because by the time we hit this target, this wave here must be equal to this wave. Can you see? This wave must be equal to this wave, right? For it to make a structural sense. And for you to measure the waves, you have to drop this here, drop this here, drop this here, exactly 100%. Look at it here, guys. That is the target for this trade. But tomorrow, most likely in London session, we are expected to have this move to the upside. Okay, expected to have this move to the upside. This is 1, 2, and 3. Take it here, most likely in London session and in New York session tomorrow. Catch this to the downside. All right. So you can now see that if you have to follow interest rate figure when you are trading the currency pair as a yardstick for you to base the pair, the currency you should buy and against the other, or the currency you should sell against the other, you might be getting it wrong, guys. Might be getting it wrong because you need to look at some other fundamentals. Look at CHF. The economy is doing fantastically well. They have surplus trade balance. They have a better current account. They have a better inflation value. They have they're better in almost everything. So that economy is better. So if you have to invest in any economy, you prefer that. If you have to invest in any currency, you prefer CHF to euro. All right, but look at euro. Euro is having 0% interest rate, which is better than minus 0.7 for Switzerland. But yet, based on this analysis, we are selling euro and we are buying to buy CHF. Do you understand, guys? So that is how you conclude when you have two currencies that does not or that do not have a wide interest rate differential. This is what you consider when you want to trade them. You don't just trade them just like that, or you don't just use their interest rate figure to judge what will happen to them. You must be able to look at some other economic fundamentals, all right, in order for you to take your decision. All right, I believe I've been able to help you a lot to understand, economic fundamentals to consider after interest rate. And I believe this will go a long way to assisting you to analyzing this market in the most appropriate way. Okay, guys, so if you have not subscribed to this channel, please consider to subscribe, and press notification bell so that when I drop new content, you will definitely receive it. But if you watch this video and you just pass, you gain a lot of knowledge, and you do not subscribe, you do not press notification bell, honestly, I don't know where the magic will come for me to drop a content and it will just come straight to you. It's not a magic, guy. You must have to subscribe. You must have to share the content, like the content, as many likes as you give, the video. So YouTube will help us to share it with many other YouTube users. All right. And that is very helpful to the channel. All right. So that is it, guy. I wish you the best of luck in your trading and in your learning of Forex trading. See you next video. Peace.